What's up, everybody? Welcome back. Sorry, it's been a while. I was on vacation and kind of took a little bit of a break from YouTube, but I am back and I'm going to actually finish reviewing this book, What Would the Rockefellers Do? How the Wealthy Get and Stay That Way, and how you can too. We were on chapter 7, but like I said, I'm going to just go through the rest of the book and kind of give you an oversight and a summary of the rest of the book. So in chapter 7, it's called Setting Up Your Family Bank and Cash Flow Insurance the Right Way. So what's important is understanding that when you pass away, no matter what kind of life insurance policy you have no control over the funds to an extent, right? Yes, you have beneficiaries, your children, your spouse, your partner, right? So that is a listed beneficiary and that money goes to them, right? But if you build your cash flow insurance properly, there will be a lot of money in there. And let's just say your children are really young and your wife is or husband is older, right? And you want it to go to them at some point when you both pass away. You want to have something in place or someone in place to control that money to make sure that your kids don't overspend it, they don't go buy lavish things that they don't need. So they call it in the book, or he calls it in the book, like a trustee or a trust. And that's just having people in place that you trust to take care of your money. So if your children are younger and you're a little bit older and you feel like when you pass away, they're still going to be relatively young, is having people in place to keep your money, to hold on to it and to manage it. And not so much micromanage it. I mean, your kids and your grandkids and all of that should take advantage of that money and use it for what they need. But having somebody kind of just like have those conversations with, what are you purchasing? Do you really need that? So on and so forth. So setting up a trust, having people in place to watch over the money, kind of like the Rockefellers did, and be able to help your children and grandchildren make better decisions in the future. The next thing he talks about is making sure the death benefit or the $1 million or the $500,000, whatever it is, making sure that is enough to cover expenses and income for your loved ones, right? Because if your kids are, let's say, in their 20s, or you pass away and your wife is still alive, house payments, mortgages, car payments, all that stuff is not going to stop. It's going to continue. So having enough money in there so they can continue to live essentially in the way that you're living now, right? So having, like, if you're making $100,000 a year, having at least maybe $1 million in there so they can have that money to still live the way they're living going forward, right? That is very important. So you have to figure out how much money your loved ones will need when you're no longer here, especially if you're the only income in the household, right? If there's two of you, maybe you take a little smaller policy, not smaller, but like 500,000, 750, something along those lines. But if you're the only one working, $1 million or more, I would say for sure, if that's your situation, right? Funding it properly essentially just means putting more money into it than you do like each month, because every policy is going to have, like, you're paying $150 a month towards the policy. That money gets it grows cash value, right? The money you put into it, but putting in an extra 500, 600, when you get your tax refund, another 1,000, like constantly putting money into it like it's a savings account, so the cash value can grow even more, right? So that's important as well. So you not only have the money for your death, which should be enough to take care of your family, but you also will have money in there while you are alive, right, to use if you need it in case of an emergency, right? So putting more money into it constantly, kind of like a savings account. Again, it's taken out tax-free if you need it. So just put the money in there, use it for retirement. That's what I'm using mine for. It's important to have money in there and continue to put money into it, let it grow and grow and grow and grow, so you have money to use if you need it in the future, right? And I'll finish with this. Life insurance policies are very important, right? If you can't necessarily afford a policy like this, at the very least, look into high death benefit term insurance, right? $1 million, $2 million, $5 million, whatever it is, at least you're covered in the 30 years from when you purchase it at the most. Some companies do allow 40 depending on your age, but having something in place, at the very least, if you pass away, your kids, your wife, your spouse are taken care of, right? I have a mixture of both. I have a whole life IUL. I have a few term life policies, and that's just to make sure that within the next 30 years, if something happens to me, my partner is taken care of, my husband is taken care of, right? So at the very least, have something in place for your family, and most importantly, if it's a lot of money, having people in place to manage it, to take care of it, so that your kids, your spouse, whoever it is, uses the money wisely, and they can continue to grow that money for future generations. And that is really the goal. The goal is to have the right amount of death benefit for when you pass away, that will be good enough for your spouse and your family to be taken care of, and having that money, that cash value in there, in the case that you need it going down into your retirement. And if you get to the age of like 75 and you have $100,000 in cash value, you can just take it out and use it for vacations or whatever you want to use it for, because at that point, I mean, you're 75, right? So, great book, really, really good information, but it's important that we have some sort of policy in place because it's a must, and we must take care of our loved ones when we are no longer here, because that's what that insurance is for. That's what the death benefit is for. And the cash value is for when we're living, but the death benefit is important to make sure that we're taking care of our loved ones when we're no longer here. So, great book. On to the next one. I'll see what that's going to be. Not sure yet, but hope you enjoyed. Have a great rest of your day, and talk to you all soon. Take care.